Is the market finally broadening out, or are some sectors heading for a profitability crunch? Today, we delve into three critical financial stories shaping investor perspectives this week. First, let's look at the quick delivery price war hitting Eternal and Swiggy shares. In India, a fierce discount war is intensifying, raising significant concerns that profitability for the nation's quick delivery firms may remain under severe pressure. Second quarter earnings for these companies missed estimates, and many have signaled a continued focus on market share growth over immediate margins. This situation matters because it highlights a fundamental challenge for investors in hyper-competitive, growth-oriented sectors: the struggle to convert rapid expansion into sustainable profitability. The continued pressure on margins could lead to further investor scrutiny, potential market consolidation, or a necessary strategic pivot towards more sustainable business models, all of which warrant close monitoring. Let's move to our second story. As OpenAI spends billions, Jim Cramer says the number of winning AI stocks could narrow. CNBC's Jim Cramer has expressed significant concern regarding OpenAI's ability to finance the billions it has committed to spend on artificial intelligence infrastructure. This colossal capital outlay raises questions about the long-term sustainability and profitability of the broader AI sector. This is critical because it suggests that the race to dominate AI may only be affordable for a select few, potentially narrowing the field of long-term winning AI stocks. Investors should closely examine the balance sheets and long-term funding strategies of AI companies, as this trend could precipitate increased merger and acquisition activity, or a clear divergence between heavily funded leaders and smaller, struggling players. This brings us to a significant market development that suggests investors are already looking beyond these concentrated bets. The Dow's banner day points to an investor pivot beyond the S&P 500's top winners. The Dow Jones Industrial Average recently closed at a fresh record high, driven by investors diversifying their portfolios beyond the high-flying AI plays and into a broader range of stocks. This development is important as it signals a broadening market rally, moving past the narrow concentration in a few tech and AI giants that have dominated the S&P 500's performance. It indicates that investors are now seeking value and growth opportunities in other sectors, which could signify a healthier, more sustainable market expansion. This broadening rally could lead to more balanced performance across different sectors and market capitalizations, offering new opportunities in previously overlooked industries and reducing the overall market's dependence on a handful of megacap stocks. In summary, we're seeing a fascinating interplay of forces: intense profitability challenges in some high-growth sectors, immense capital requirements in the AI space potentially leading to a more concentrated market, and a welcome sign of market breadth as investors diversify beyond the narrow tech leadership. Investors should continue to watch for sustainable business models, scrutinize capital expenditure in rapidly evolving sectors, and explore the broadening opportunities across the wider market. Drop your thoughts in the comments, and if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.